It's 11:47 p.m. Your coffee went cold an hour ago, and you're staring at a sprawling spreadsheet trying to make sense of sales tax for Amazon FBA. Somewhere between Ohio and why is Colorado mad at me, your soul tries to escape through the ceiling. Breathe. Sales tax for Amazon FBA feels like a boss battle. But it's really a puzzle with a handful of pieces. Who must collect, where you're on the hook, what you're selling, how Amazon helps or doesn't, and what you still have to file. Get those pieces in the right order and the monster turns into a house cat. Start with the biggest myth. Amazon handles all the tax, so I'm done. In most US states and localities with sales tax, Amazon is legally a marketplace facilitator. That means when a buyer places an order on Amazon's platform, Amazon itself calculates, collects, and remits the sales tax for that marketplace order under Amazon's own tax accounts. Your payout already had that tax siphoned off and sent where it belongs. That's why your bank deposit doesn't match gross sales. So yes, for Amazon, the marketplace orders, the platform is wearing the tax cape. But that doesn't mean you get to disappear. If you sell anywhere else, Shopify, eBay without facilitator coverage, your own site, a trade show, you still need to know where you're required to collect and remit under your own permit. And even when Amazon collects, some states still expect a return from you if you hold a permit there, showing that your Amazon marketplace sales were taxed by the platform, and your own direct sales, if any, were taxed by you. You won't be writing checks on those marketplace amounts, but you may be reporting them. Now slide the next piece into place. Where lives on two rails, where your buyers are and where you have Nexus. Nexus is just tax speak for a taxable connection with the state. There used to be long debates about whether your FBA inventory in a state warehouse created Nexus for you, because it did. Then economic Nexus arrived and the question broadened. Even with no inventory and no feet on the ground, do you have enough sales into a state to be considered in business there? Most states use a revenue threshold, often around 6 figures in a year, and many have dropped old 200 transactions triggers. The exact numbers change by state and over time, so you don't memorize a chart. You run a simple yearly sweep. Pull your ship-to revenue by state, compare each state to its current threshold, and mark the ones where you crossed. If Amazon is collecting on your marketplace sales, that doesn't erase economic nexus. It just means that for marketplace orders, the platform is doing the collection. If you also make direct sales into that same state, you likely need your own permit, and you're the one doing the collecting there on the non-Amazon orders. Inventory still matters, but the story changed. FBA inventory in State X will usually create Nexus for business taxes and may keep a sales tax registration open for your non-marketplace sales. Yet Amazon's facilitator role generally covers marketplace tax. Think of it like dual tracks. Marketplace handled by Amazon, everything else handled by you the moment you're in a state. All of this assumes the item itself is taxable. Product taxability is the sneaky subplot. Some things are taxable everywhere, like most electronics. Some things are taxable in one state and not in another, or taxed at reduced rates. Think basic groceries, clothing, supplements, or digital goods. That's why Amazon gives you product tax codes in Seller Central. Those codes translate the thing you're selling into the right tax treatment for each destination. If you set everything to a one-size-fits-all default and move on, you're asking the system to guess. A general code for taxable goods works for a toaster. It's wrong for a loaf of bread in states that exempt staples, and it's often wrong for apparel in states with special clothing thresholds. The trick is simple. Map your catalog once. Assign a food or grocery code to food. Use a clothing code for apparel. Pick the right one for dietary supplements, and leave the general code for genuinely general taxable stuff. The moment Amazon knows what your product is, it knows how that thing behaves in New Jersey versus Texas without you playing rate change whack-a-mole. Shipping and handling sneak in here too. Some states tax shipping if it's part of the sale, others don't. Some only if you don't separately state the charge. Amazon's tax engine is designed to follow those rules when you've mapped products correctly and allowed the platform to compute. Where sellers get into trouble is when they override settings or layer on custom charges that the engine can't see as shipping. If you let Amazon calculate and don't get clever, shipping taxability mostly vanishes as a problem. Gift wrap, warranties, and extended protection plans ride the same roller coaster, taxable in some places, not in others. Again, the platform knows the map as long as you mark the item type honestly. At this point, you might be thinking, if Amazon collects for Amazon orders, why do I need to register for anything? Because the world is bigger than one marketplace, and because the permit is sometimes your ticket to compliance across channels. Imagine you cross the economic Nexus threshold in state Y thanks to a great holiday season on Amazon. You also sell 10% of your volume on your own site. In state Y, Amazon is collecting for your Amazon orders, but nobody is collecting for the orders from your site. If you don't register and collect on those, you've just created an unpaid tax trail. Worse, if you registered earlier, say because you had FBA inventory in that state, you may owe returns even if your only state Y sales are on Amazon. Many states let you file a marketplace-only or zero-due return showing that your direct sales were zero and the marketplace handled the rest. A few will even let you close a permit if your sales are truly marketplace-only and you intend to keep it that way, but you should verify that before you slam the door. Closing and reopening is sometimes more painful than keeping a low-maintenance filing frequency alive. So what do you actually set up in Seller Central? You let Amazon's marketplace facilitator collection do its job for every jurisdiction where the law says it must. You map products to the right tax codes, so the engine applies the correct treatment by item and by destination. You enroll in the Amazon tax exemption program if you sell to business or exempt buyers, so that verified exemption certificates flow through the system and you don't accidentally collect tax from a nonprofit or reseller. And if you make off-Amazon sales, you keep your own tax calculation service on that other platform aligned with Amazon's logic so customers aren't whiplashed by different totals for the same address. The monthly rhythm is less dramatic than the setup. Amazon will include tax lines in your transaction and date range reports and summarize what it collected and remitted as the facilitator. Those amounts are not your liability. They're proof that the liability was handled. You, meanwhile, look at your non-marketplace sales by state. If you crossed a threshold, you add the state to your Collect Here list for those channels. If you didn't, you note it and move on. Once a quarter, you double-check whether any state changed a rule that matters to your catalog. The big changes are rare and well-telegraphed. This isn't a daily soap opera. It's weather. Carry an umbrella in case, but don't live in fear. Live. There are two places where Amazon sellers tend to stumble, and both are avoidable. The first is double collecting by accident. A seller turns on tax collection inside Seller Central years ago for a state where Amazon now collects as facilitator, forgets the toggle exists, and ends up collecting tax on top of the tax Amazon already calculated. Customers complain, chargebacks appear, and panic ensues. The fix is to trust the facilitator system and avoid manual add-ons in those jurisdictions. Your job is product mapping. Amazon's job is math. The second stumble is the opposite. Assuming Amazon collects means I never have to register anywhere. If you only ever sell on Amazon and never cross a state's quirks that require you to hold a permit for non-tax reasons, you might genuinely live a registration-free life. The moment you sell on your own site or hit a channel that isn't fully covered by facilitator rules, you'll need permits where your economic nexus lives. The good news is, you can keep that list short with one annual pass through your state-by-state revenue and a quick reality check on your inventory locations. What about the scary-sounding places? Colorado's home rule cities, Louisiana parishes, Alaska's local program. In the facilitator era, Amazon largely shoulders the local complexity for marketplace orders under its own registrations. Where you feel the maze is when you sell off Amazon. In those cases, you use the state's one-stop portal where it exists. Register locally where the law requires, or consider a certified service provider if you've outgrown do-it-yourself. The threshold logic still saves you. Lots of sellers never cross local triggers outside the big states because their off-Amazon volume is modest. And remember, even in these hard places, your marketplace sales are not asking you to do anything beyond keeping clean records. International sellers add a spicy note to the stew. You can sell on Amazon US from abroad. Amazon will collect US sales tax on marketplace orders the same way. If you also sell on your own site to US customers, you're still looking at the same Nexus thresholds and registrations for your non-Amazon channel, regardless of where you live. You don't need a US tax representative in the European sense for sales tax. You just need to register properly and file on time for the states where you have to collect on your direct sales. The tough part isn't the law, it's the calendar. Put the filing due dates on a real schedule with reminders and the terror evaporates. Product taxability deserves one more lap because it's where you can either save customers money or invite headaches. Clothing under a certain price is often taxed differently. Groceries and prepared foods split into separate lanes. Supplements and vitamins aren't treated like cereal. School supply holidays pop up in late summer in some states and slash the rate for a weekend. Amazon's engine adjusts automatically for these holiday windows when your product code is correct. If you mark a hoodie as general taxable, Your buyer in a state with a clothing break might pay more than they should. They won't write a poem about you in their review. Take an afternoon, map your top SKUs, and your customer experience rises with your compliance. Refunds, returns, and restocking fees slide into the story without fanfare. Amazon adjusts sales tax automatically when you refund the customer through the platform. If you charge a restocking fee where permitted, the tax follows the same proportion. You don't do separate math. You just don't fight the system. For your direct channel refunds, your own software should mirror this behavior, but it's your job to calibrate it. Then there's the little cousin. Use tax. If you buy supplies or equipment for your business and the seller didn't charge you sales tax for your state, you're often required to self-assess use tax. It's the mirror image of sales tax, and it lives on the same return in many states. This isn't a trap, it's honesty. If you run your business costs through a tax-free purchase from a state that doesn't care about your address, your home state probably does. Put a small line on your monthly checklist. Did we buy anything tax-free that should have been taxed? If yes, add it to the return and move on. You might be wondering if there's a way to turn this off. There isn't, and you don't need one. The goal isn't to dodge, it's to automate. You let Amazon do what the law hired it to do. You keep your catalog mapped. You register where your non-marketplace sales make you in. You file on time, even if the return is just 3 lines that say, "Marketplace handled the tax," and "I had 0 direct sales here." You review thresholds once a year and you stop worrying the other 364 days. That's the whole game. So is sales tax on Amazon FBA really that complicated? It's detailed, not diabolical. The complexity you feel is all the old internet advice scraping against today's marketplace rules. Before facilitator laws, FBA inventory meant registering everywhere your boxes touched. After facilitator laws, Amazon takes the marketplace wheel. Your job shrank to product mapping, non-marketplace channels, and light reporting. That's not nothing, but it's not a boss battle either. It's a checklist with a coffee break at the end. So is sales tax on Amazon FBA really that complicated? It's detailed, not diabolical. The complexity you feel is all the old internet advice scraping against today's marketplace rules. Before facilitator laws, FBA inventory meant registering everywhere your boxes touched. After facilitator laws, Amazon takes the marketplace wheel. Your job shrank to product mapping, non-marketplace channels, and light reporting. That's not nothing, but it's not a boss battle either. It's a checklist with a coffee break at the end.